Welcome. Hope everybody's doing well. Let's get started with another Okie trade study session. And yeah, today's 3/5/2024, and let's get into it. So today we had some good true penny stock stair steppers, and I'm noticing that we see these really work pretty well whenever the actual like small cap market isn't doing much. So that works fine for me. So whenever there's a good, little small cap breakout set up, I'll focus on that. And then when there's not, I'll just focus on these. And whenever I make a good green trade or two, I'm gonna get out. I'm gonna take my money and run. There's no need to give back. And it's the same thing if you have a small account. You make one or two wins, even though you only made 10, 15 bucks or whatever, because you're only risking a dollar or two, something like that. Well, just because you're trading a really small account, you don't want to build bad habits by giving back your gains, because that'll leak into whenever you do have a bigger account, and it's easy to give back the gains. So that's my number one thing is if I have a good trade and I'm not feeling that great on the day, then I'm just taking the money and running. And if I have a really good trade, I'm gonna just take the money and run. If I have like a medium trade and I feel like the day's really good, well then I'll take another trade. And if I have another good win, I'm done after that. But today I kind of wanted to really just focus in on these true penny stair steppers, because again, that's really the only thing that happened today, and that's the theme of what I've been trying to get everybody to look at, because that's what I consider the only thing that works well easily pretty much every day, and you're seeing multiple examples of them every single day. So how did the day go for me? First thing I noticed was NRXP, and I traded it pretty well here. Zoom in. First thing I noticed is we had a big spike, but if you saw my last video, I'm not looking at these real wide ones. And again, the reason why is because typically they either fake out, or if it does hold, well, my risk reward's not that great and I'd just rather pass on it. So a lot of times I'll just pass on those and you get a better setup right at around the same level. And again, what happens? Kind of a little head and shoulder scenario, right? Where it peeks through, holds the risk level. We have the shoulder here, head, which I'm not looking at that yet, but I'm noticing it because I'm always trying to keep an eye out for things. But let me focus here. So how did I trade this, right? Well, what did I see? I see what I'm looking for is a stock that has strong volume and it's showing me that it can make a move. What's strong volume? Well, I want at least 50,000 on average per 1 minute candle. And what do we have on these candles? 130,000, 20,000, 40,000, 50,000, 100,000, 35. So it's at least averaging 50,000 per 1 minute candle. It makes a move from 56 to 66. That shows me that it has strength. It's holding levels, so it respected the stop. And then I'm looking for especially these 4 minute sideways situations. So I see this right here. And I'm risking right here. So my entry was 64, risking 625. Get the nice move up. And now I don't add on a 3 minute candle break on something like this. See how like one candle, two, three, if it would have broke right here, I wouldn't have added. Because why? The big long wick. Avoid those. But here, you notice how it's tight right here. So I added right here. I got a starter here, added here, and I really like to add whenever I'm able to move up my stop cleanly. So if I stopped out right here, I'd be a loser on this entry, but I would be a winner on this one. So much so that this winner would overwhelm this loser, and it would still be a winner. But now I have double the size, and it's a winner no matter what. And I get a spike up to 70, holds. And I'm getting a little nervous because it has a pullback, but what does it do? Holds my stop, curls back up. I should have added right here, but this is something I'm not quite used to yet, is this little miniature 3-minute structure under the main level. And this was too wide of a level for me to add from here to here. So I didn't. And then after we had this really extended move, I realized that we're extended from here to here on a straight up line, if you think about it. So I just sold it all right here at 715. So I had this entry, missed this ad, and sold it all right here. And that was my only trade for the day. And I missed Eva. Same deal, right? Look at the volume. Follow the volume. 70,000, 100,000, 150, 30, 40, 70. Looking for stocks under $1. Makes a move, 56 to 65. Basically the same difference. Pulls back. And this would have been the perfect starter right here. Well, actually, let's just do it like this. This would have been the perfect starter. Notice that like perfect sideways structure. You get the move up, confirming, holds. And then this is something new I'm working on right here, is this ad where you're risking that, because I would add this if it was above right here. So if we broke above this candle, like right here, notice this structure. It's the same as that, but it gives you a better risk to reward than buying it right here, risking right here. So this versus this, buying here, risking here versus buying here, risking in the same spot, basically. So this would have been the first good entry. The second, after I missed this one, I was like, I don't know if I want to. I'm hoping it kind of gives me another entry, but it breaks right here. And I thought, well, I don't want to add because, again, this is too wide of a risk. And then, of course, it busts through. And then, again, I'm not adding this 3-minute structure. Why? Because of this long wick. If it would have been something like right here where it bottoms here at the same level as here, sure, I would have bought it right there. But that doesn't happen. So we don't do that. And then it ends up holding well, of course, right? So this is the risk spot. So you're in here, here, and this is the risk all the way out to here. But then it holds up, and obviously you're risking right here with that 3-minute structure, perfect. Actually, with the 4 top out right there, and then that little 3-minute candle, 3-minute bar break. I don't know what to call it, where you add right there, and then of course you're gonna sell it into the stall out. You're not looking to hold it up here. That's a huge move. And after I missed this big one, I was like, yeah, today's kind of slow. And I've already missed, I nailed one good stair stepper. I don't like to give back gains, and I just missed another really good one at the same price level. So I don't really need to trade anything else. But for study purposes, let's take a look at a few more. SBFM, we also had, this was a huge one. And I almost did take another trade, but then I noticed that uh, I don't know, something was off, so I just didn't do it. But what do we want to see? Volume. Look at each candle's volume. Huge. 5 million, 3 million. This stock had insane volume. Okay. Shows its strength, makes a move up, but we kind of want to pull back, right? But we don't get that. So in this situation, what I'm learning is, right, we missed this entry with that risk. We missed this one, right? Well, we can always take the next one because we would add there for sure. That's a clean add spot. And then we would add again on this new structure right here, risking right here, because now our risk is cut in half because we were buying right here, risking right here. So now our risk from here to here is half of what it was from here to here. So we add here. Now we've got this one and this one. We got 2 entries. We missed this one because it showed its strength, but it was a little bit too quick for us. A little bit too quick. But then we get this next entry right here. And then we get the next one. And then look, obviously we get this huge move up. And as soon as it starts to stall out, you just sell it. And that's a huge one. What's nice is this one even offered a little secondary leg. So technically, if you look at it, I wouldn't have bought it here, but it holds itself, so that shows that it's like respecting the stop, right? Because it pulls all the way. So if you bought it right here, risking here, it pulls all the way back, but it holds, okay? And then you can say to yourself, well, the next entry I'll get in. So we get the spike up, and we get the sideways action, and you would buy right there, risking here. And then this one's a little bit too weaky, so I'm not going to add here. And then we're just kind of waiting for another entry. We get the super nice quadruple top right there with this little 3-minute sideways structure that I probably would add now. I'm starting to look at. So we're in right here. Add here. Get this nice move up. I wouldn't blame you if you sold it right here. But then look what happens. You get this nice add spot. And then you get another move up. And if it's a little quick and you miss your sell at the top, don't panic out into the dip. No. If it goes under your entry, fine, get out. But if it doesn't, holds, let it spike back up, you get a nice move, then you just scale out right there. So that's 3 stair steppers where you could have been risking, say, 10 on each entry and made 100, 200 bucks on each one. I don't know about you, but 2, 3, $300 trades. I mean, you 600 bucks a day. That's huge money. That's quitting your job money. So take advantage of these study sessions while you can. That's 3 of them. I don't know about any other patterns you've seen that work 3 times so easily and so clear. But we see this SBM FM stock, right? With this huge volume. The volume is insane, doing like 1 billion shares of volume. 662 million. So I thought to myself, man, we might have a sympathy. And we kind of get one, right? Shows its strength with the good volume. And then you don't really see a great entry, but what do we have right here? A clean one. And then if you wait for your clean entry, you get rewarded and you just sell it into the stall out. You only get the one ad, so you only might make like 50 bucks on that, but it was easy. I'll take $50 on an easy victory. And then you're like, all right, where's the next? Because this was a stock that's under 10 cents with this huge volume. So you think to yourself, find some more stocks under 10 cents. That's what I was looking for. And then, all right, well, maybe you missed that one. Well, here comes another one. You know, that one's a little bit sketchier, but still look at the victory. Boom. And then another little setup right here. And, you know, maybe you don't sell into this one, but you get that big crack and it doesn't go under your entry, holds your entry. So then when it comes back up and you can see that it's topping out, you just cut it right there. And you take your small scalp. So the reason why these didn't work so great on the sympathies, in my opinion, is SBFM basically should have gone to like 20 cents and it really just had a few good trades on it, but like nothing super crazy good, you know, nothing that like everybody was expecting it to happen. So everybody was expecting it to go to 20 cents. So the sympathies didn't work that great, but there was some easy victories, and that's what we want. These high dollar stocks, man, they're just tough and they hardly ever work, seems like. So that's why I'm just focusing on these right now, mainly. And then for the people that have to work earlier and can only show up late in the day, seems like every time it's a slow day and there's some good stair steppers. So like you did some scanning, you saw, hey man, there were some good ones that worked today. Well, check out, there could be another one. what happened? Volume comes in, right? 50,000 minimum. We see it doesn't move. 66 up to 80. We're like, okay, that's a strong stock, right? Pulls back right there. You know, you could take that right there and I wouldn't blame you. And then as it comes up and pulls back in, you have to cut it at your entry. So that's a break even trade, right? But then you get this nice one right here where you add and then it respects. You can see it respects the stop. It's a little sketchy right here, but then you get the next ad, and then the volume's so strong on this and so consistent. That's why you're trusting it, especially. And then you get this huge move up. So you got a 77 entry, an 83 entry, and you get to sell it at 90. That's huge. That's like 600 bucks, only risking $20 on those entries. I mean, yeah, or at least like 300. Somewhere in that range. That's huge. That's a huge, yeah, it doesn't look like a lot, but it's a lot. Like, as far as, uh, if you're buying multiple thousand shares because your risk is so tight, and then you're risking like 1 cent and then it goes up 10 cents. Or in this case, you're risking 2 cents on each one, and then it goes up 20 cents. So you're getting 10 to 1, basically. But on multiple entries, that's what's crazy about it. And you get to move up your stops. Your risk is here, and then you move up your risk to here, etc., etc. And then we get another one, right? So again, what do we want to see? I want to see the strong volume. So it needs to be kind of like above this minimum line, right? And it's kind of under it, right? But we notice that it starts to get consistent right here. So I'm not really looking at right here per se, because look how the volume's too low. But then as it starts to creep up right here, yeah, this is the entry, right? Risking right here. And then I'm not taking this one because it's too long of a wick. It doesn't look right. But this looks clean to me. I'm taking that. And then look, holds up, respect. So I'm not adding right there if it would have broke. But look how tight that is. So I'm definitely adding. And I'm able to move my stop up. And it's above this entry. Or at least break even with it. And then we get this huge move up. So 3 entries, you get 20 cents move. I mean, that's a huge trade. So don't sleep on these true penny stock stair steppers. And how I'm scanning for them. If you stuck around to the end, you get to see the goods on that. Um, right here, this is how I build it. I have the markets. So you'll just go into here and you'll just click around into where you find the markets, where it'll say like uh, right here, markets. And so I'm getting rid of the OTC sectors. I only want NASDAQ, New York Stock Exchange, Amex. And then I'm on like the price right here. I'm looking for the price, and I'm looking for the last price to be greater than 1 cent. So I double click that and I come over here and then click on the greater sign, put that at 1 cent, and I repeat that, but just less than sign over here, 99 cents, because I'm only looking for stocks between 1 cent and 99 cents. And at the beginning of the day, I'm only scanning for 500,000 in volume or greater. But after a couple hours passes, I'll bump that up to like 1 million. All right, y'all. So I hope you enjoyed it. Again, review these because these are beautiful trades. I hope you really study up. All right. Take it easy, y'all.